What's happening, guys? I hope everybody had a fantastic weekend. We have the last Sunday video for August, and we'll be into September by week's end. SPY came in hard on Friday, and we've kind of been talking about when things go straight up without any real correction. It's not healthy, right? Normally, pullbacks along the way are healthy because it promotes longevity. But when something just goes up and up and up and up, when things hit the fan, they come in hard and aggressive, as you saw on Friday. And, who knows what's in store for the week ahead. Are we just going to have a gap down and rally back? Are we going to gap up, fade off? We don't know yet, but you have to come in with, an open mind. And this is why it's been a super difficult market for a lot of traders, just because they're trying to think big picture and take advantage of this swing market. And then you end up with a day like, Friday, and all your gains are gone. So just be super, super cautious. It's definitely still a trader's market. I've been performing well in this volatility, and the last 2 weeks have been, maybe one of the most incredible in my career as far as, stretch of just consistency. And the only reason that I mention that is we talked about opportunity cost last week. And had I not stopped out on BBVY, had it ripped me a new one and become like a Kodak type loss or, something like one of those, would I still be firing on all cylinders? Would I still be aggressively, pushing the envelope when trades are right to maximize my gains? Probably not. I'd probably be like a little risk adverse, trying to just, get by and grind back. So beyond just the stop, and preventing extra losses, by stopping out, you're actually preventing, missed opportunities, because you can just go for it. You don't need to think, because your max stop kept you in the game to a number that's maybe only a day or two's profit, and it's not taking a week or a month or a quarter or a year's gains, right? And so for some people in a situation like BBBY or, going back to AMC and Clove and DWAC and Kodak, that could take back a quarter or a year just like that. And, you basically worked for free all of that time. That's how you have to think about it. You basically worked for free. When you don't respect your risk, you're basically working for free. You go back 3 months. You knock out 3 months of profits. You just worked for 3 months for free. So it's always about making sure that you don't take, a bunch of steps backwards and stay on that path forward. And, that's where I'm at right now. You've seen me taking off a lot more time. That's always been my goal. And the more I talk about it, the more I do it. And so I'm going to continue to talk about it and continue to do it. But that's really the main point for tonight's scan, is just that opportunity cost and working for free. And when you think about that, when you're faced with that decision, no, I'm too proud to put a stop on my account. Or, no, I'm not going to stop out. Maybe it comes back in. Well, what if it doesn't? And what if it takes back a quarter worth of gains? Are you happy about working for free? And think about that when you're faced with that decision. Last couple things is, for me, I need to be ultra aware. I've been writing it in Scan. I don't want to just be trading aggressively to trade aggressively. There's no need to in this market. Just be patient. Let things kind of, unfold in front of you, and then go for it. And I think you'll see that. NERV, NERV, for example, was straight up on Friday. It never breached VWAP. So there's no real point to be shorting it. You need a parabolic move and then slams back, comes back, and fails to follow through. You don't need to try to figure out when it's going to pop or when it's going to top. You could be $1, $2, $5 too early, or just be patient and be 50 cents late, right? And then you actually have a solid risk to reward. Also showing up for broadcast. Sometimes people skip it, sometimes they don't. I think most members are showing up for it. But that preparation, it's been 2 main trades every single day. walk through what I'm looking for, walk through what would make me take the trade, and most importantly, I walk through what would make me stay away. If it holds over a key level, why would you be looking for a short? And so we had an example of that on drug the last couple days. Each key line given, every time it came in, it stuck there. And so if you had your covers in and you're proactively covering, great trade. Same thing on Friday, came in and it held key level. And I think it was like 330s range or something like that. Then it kind of grinded all the way back up to VWAP, blew out the stubborn shorts, came back. So for example, if you're anticipating it to hold this level that it's been holding 10 a.m., 11 a.m. plus, then when it squeezes up to that VWAP level, you're not emotionally covering, you're looking for opportunity. You're looking to rescale into that trade. And then when that 330s, I believe was the level, breaks, and not just 325, because sometimes it goes right back up to 335, right? Confirming a level is when it comes under that key level, retest, fails, comes back a little bit lower, fails, retest, fails, and then starts to follow through. At that point, you have all these folks that are trying to buy the dip now are going to become sellers anytime it goes back up. You want it to become heavier and heavier and heavier. That's where your risk goes down a little bit, because you're not trying to find the top when it's still thin, but now you're actually competing for entry with sellers that now want to get out, right? That's the goal. You don't want to be the only seller. You want to be competing for exits with sellers. You don't want to be the only seller who happens to be a short. So that's that with those. And then hopefully you guys have been checking out the interviews. We are going to continue to try to get as many as we can. If you guys have any suggestions, reach out. I want good information. I want different types of traders. And I think that we've kind of showcased that so far. We've got a bunch of different traders. Some newer ones, some that have been doing it for a very, very long time, and some, almost retired at this point. So I hope you guys enjoy it. Make sure you check it out if you haven't. But let's get right into Scan for the week ahead. First and foremost, Scans winner, Scans with a Z, SCANZ, which is one of the softwares that I use to basically, scanners to look for opportunity. Giving away a month of that. And so Israel, you've won that. And then the t-shirt winners is Scott Fisher and Zach Potter. So just email me, webmaster@investorsunderground.com. And just know if you are from Canada and you're a winner, it does sometimes, they have been going through, but they sometimes take a while. It just, since COVID and all the lockdown and all that kind of stuff, it's been difficult to get them across the border. But sometimes they get there, sometimes they don't. All right, let's go over Scan for the week ahead. All right, guys, so for Sunday video scan, as always, I'm not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. My goal is to get you to understand my mindset, what would make me take a trade, where I feel it has good risk to reward, and if and when it does set up, why. Really the why, and understanding the type of setup that it is. And you should, by this time, if you've been watching these for a while, kind of see the same setups over and over and over again. And I just kind of rotate to whatever one is doing it and whatever one has volume. And then we've got that 2 to 3 days that we can kind of surround that move and then move on. And, that's my style. That's what works for me. And it may not be the best for you. Maybe it's better for you to be looking for a bigger picture type trade, something that is, multi-day, something that, is more either on the long side, short side, whatever case may be. Everybody's different. But the idea is idea generation. And, each morning when I do the broadcast, that's why I do, some stuff in the $80 range, some stuff in the 20s, some stuff in the 2s, just because I know what is likely to have range. I know what is likely to have a proper edge type of setup. My goal is just to kind of provide the best opportunities out of each sort of setup, whether it's long or short, and, whatever the price range. So hopefully you guys are benefiting. As always, if you leave a key takeaway with the timestamp, we pick winners every single week. And t-shirts, Icon meals, scans, and IU as well. All right. FTCH has been pretty steady. It had a nice gap up day, and then it ramped up, came back down, and then we had a big gap up again. So what I'd love to see is it sort of kind of come right into basically this level over here, which is like that daily VWAP level, and then see it fail to follow through. So that kind of looks like this on Friday's levels, which kind of aligns with where it was having trouble. And so normally what I'd be looking for is a 1220 to 1250 kind of blow off move. Look for this level to start to get heavy, and then look to scale into the trade. OXY has been fantastic. This one actually came in after hours. By the way, I didn't realize this until recently, and I've been using DAS for, I don't know, 19 years. But I didn't just put these lines in. This was from prior days, prior weeks. And the way that you can do that is you right click and go to configure, and then you just go down to this save trend line. And I think you can see that, but if you can't, I can put a screenshot too. But under the settings, you click save trend line, and it's going to keep your lines from the prior days, which is super, super helpful, because sometimes you're kind of in the zone, you're thinking about things, and the trade starts to work. You're like, oh, great, this is fantastic. I'm just going to let it work. And then you realize that it hit the exact same level that they were supporting the prior days. And what's interesting here, we were talking about these levels, this particular day, and you can kind of see how I identified them, right? We don't have all the information on the right yet, but you can see how I identified those as being sort of the key levels. And then flash forward to the next day, and you can kind of see that this prior, top became the base, and then it broke out, came in, and it bounced right off that line. Came back, broke, bounced right off this second line, which was the support from the prior day. And then same thing again. So when you're trading it, it's sort of a reminder, hey, it's probably a good idea to adjust down here. And, a lot of times, especially on trades like this, it's nice to scale and get some size, but there's nothing more annoying than scaling in, getting on the right side, having a great trade, and then having it bounce right off the level and, do that V-shaped recovery right back up. And you got nothing, right? You minimized it back to flat, or maybe you turned it into a small loser. So this just helps me like, hey, you probably should be adjusting here. And the fact that you can keep them on the charts, which for whatever reason, I didn't know until this week. I thought I came up with a brilliant idea, and I was telling their support, and they're like, oh yeah, no, you can do that. So that's that. Higher the better. 7350s is sort of a guide, but you should have USO and some of these other ones up just to kind of get a vibe for what's going on in the market overall. You should have natural gas, oil, all the energy type names, have them all up just to kind of get a general sense of, are they bidding these things up today, or are they leaning on them? So I'll keep you kind of safe with that. JZ, if you guys read scan on Friday or for Thursday night, you knew that it was of interest. I was going to be watching it. I was going to be getting borrows, and it didn't disappoint. So a lot like MEGL, and MEGL, like I said, on the time that I had traded that, I had traded like the first candle, which small, but it was why would I have done that? And it was frustrating for me. It was like maybe 3 or 4 Fridays ago, and I knew I shouldn't have touched it. And granted, it was a small position, but it ruined my. I would have been probably scaling in throughout the day. And for me, I had an appointment. I was like, you know what? I'm just going to take it off and move on. And, it would have worked. It would have been a fantastic trade, but it is what it is. And I didn't want to do that with this one. So I let it open up, and I had a nice open at 10 and went straight into a circuit halt into the 160s. So I put on a very, 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 very minimal amount with a goal or a thought that we're probably going to go to 200. And then it opened up and it exhausted, and there was just not much volume. There wasn't all that, aggressive oh man, I'm bent, it's going to go to the moon, like MEGL. Now you kind of have to go on the other side of these types of trades and understand what type of market what type of market environment we're in. After HKD, everybody went nuts on MEGL. And then this one, everybody was, excited that it's going to be the next big one. Next HKD. When that is the general consensus, you know that most people are going to be cautious with shorting. You know that most people will be considering buying it just in case they can flip it from 80 to 200 or something like that. And traders just have short-term memories, and they forget that it's all as soon as you think this is the obvious one that's going to go crazy, it's the one that they're going to liquidate, right? So you always have to be sort of one step ahead. And if you're wrong, you got to be okay to be wrong. So at any rate, I put on a tiny bit, put on a little bit more. And I unfortunately only used about 20% of what I had borrowed. Granted, when you make $100, $130 or whatever it was a share, it doesn't really matter. It's still a good trade. But I definitely fumbled based on the opportunity that was there. Now, do I have regrets about putting more on into this level? Would we be having this conversation if it was 220? Right? No. So for me, I'm relatively risk adverse. I don't want crazy headaches. I don't want, to get in a situation that I regret. So no, I'm not upset that I didn't put on more. I could have probably put on some more over here, but I traded within means based on the amount of volume that was there and based on what I felt comfortable with in the event that I needed to go up through a $20 or $30 swipe up, so we just had another big opportunity with this IPO, STBX, which you guys saw. And, this one had a lot more volume. And so I was able to participate at a much higher capacity. And we had, the first one had 180,000, 78,000, 90,000. Then it came down, basically went sideways, rejected. And to me, those are all the signs I need to see. So you saw that I scaled and scaled and scaled and scaled. And that really started the fireworks for this week. So, the only thing that I did wrong with STBX is I didn't go back enough each morning. I did it for the first 3 mornings, but I didn't on Friday. And Friday still offered another $1.70. So at this point, hopefully it pops and gives some sort of exhaustion and then starts to fade off. But we'll see. Both of these, JZ and STBX, they, higher the better. Hopefully they bounce and then look for them to kind of fail to follow through. STBX, for example, go back to ILAG, OST, all of those. It's going to be an obvious short. We all know that, when it bounces. But what happens is they either ramp it up fast, consolidate, trap for a couple hours, squeeze out, and then walk by 2 or 3. Or they just do that one hurrah and then fades all day round trip. Either way, should be prepared for a round trip. But don't get in a situation where in the morning they trap and you take too aggressive of a position. So I always want to be cautious with JZ and SPTX in that situation. Just because it's one of two things. They're both going to round trip. But it's just whether or not you can make it from point A to Z. Now, failed follow through. Nerve. Looks like they kind of squeezed everybody out after hours and slammed it down. That does not mean anything though, come Monday, right? So this is the level that it's kind of been basing at. And if you look back, this is, the close. So all of this happened after hours and they slam it down. It looks weak. It looks aggressive. It looks over. But really, we're just right back to where we were. So are shorts let out at all? No. So just think about that. Personally, if I was going to be trading it, I'd probably be looking for some sort of 1150 kind of exhaustion move. And then if I dabbled in, I'd not be patient unless 1070s, 1060s started to fail to follow through and we had some sort of nice unwind here under 1050s. So that's sort of the levels that I would be patiently waiting to see fail. But I think a lot of people got bent on this thing. And if you look back, you'll notice if you have VWAP on your charts, there's no reason to be fighting this thing. And that all comes down to just being stubborn. I mean, that's just a stubborn overhold, ignoring that each dip kind of held, and, so on and so forth. So, if that was you, yeah, sometimes they sneak up, but, make sure that you correct it for the next one. Great daily chart setup. Definitely, threw some shorts for a little bit of a loop, and so we'll see what happens. But just think about, we had this conversation about TBLT and GOVX, right? And everybody wanted to get the top over here. And everybody wanted the top on TBLT over here and over here, right? And then what happened? You got exhausted from it, took it off radar. We talked about this last week. So, Nerve is one of those. Everybody wants to nail it. Just let it do its thing. And if you nail the trade, there's nothing wrong with locking in, because everybody's going to be waiting for more. So it's going to hang around longer than you think. And then when you forget about it, you're going to see that it's probably at $5. Drug. This one was fantastic. This is the one I was talking about earlier. And we had a nice breakdown on Friday. And 330s was the level that I was talking about. And you can see how, it flushes out, came in, and it was pretty much holding the same level all day. So what happens is if you're not locking in over here and you've sized up at all, you're probably covering into this move. But it's a very clean exhaustion move. Here's the channel that was kind of pre-drawn. 360s was sort of my level on Friday. And then as it breaks down under that key level, we get the unwind. So it's not something where you have to be aggressive, you have to fight it, you have to be patient. It's about, paying yourself along the way, letting your, rescaling and having that nice risk. You're adding to a winner. It's a good risk reward type of trade setup there. So ideally we get a morning shove back towards 3 or above if we're lucky, and then failed follow through from there. Party breaking down, higher the better, failed follow through. This is like Fubo and all those other ones. They just they got thrown in the mix of all these crazy runners that probably shouldn't have been running, but they are. And now it's starting to unwind. So watch this one for a fade back to where it came from. Sega, of course. I wish I was a little bit more in tune with this one the last few days. I mean, it's been that slow, steady pressure day, and then that unwind day, and now we're right back to where it kind of started to squeeze. So, that said, we could be coming back under VWAP here soon. So I'd be watching all pops. It's just like Veru, where we had that same squeeze out. So these kind of are beating the same drum here. I mean, they're both doing the same moves, and I feel like everybody was equally bearish on Sega as Veru, and ended up having that last hurrah type squeeze out. And the level that we've been watching the last couple days is every time it gets over 18, it's been pretty aggressively being sold. So be aware of that, but higher the better on both Sega and Veru for fails. And then last but not least, Blue Apron's been fantastic. Had a really nice trade this day. Had a nice opportunity on Friday. So at this point, I'd basically be watching for this sort of 570 level to give way, and then we probably open up to 520s all the way down to 480s. So if it stays heavy here, I think you'll start to see sort of that backside move like we've seen on Veru and Sega and many of these others. It's following the same pattern. It had that big move, it had the squeeze out, it had the big gap. And now the market's just not going to support that if it stays in the gutter. Last but not least, on continuation side, GLTO, fantastic looking chart. I have no position, but these are the ABCD type setups I look for, and we're over this level here, 235 or so. So for me, if I'm looking to get long, I want to see it hold 230s and risk towards 230s over and under. AVYA was fantastic the last few days. Came in on Friday, obviously. It pulled back some, but that's normal. It had a 50-60% move. Saw it get soaked up this day, and then on this day, I said, you know what, this thing, I think it was, 105 that was supposed to be. think it was this day actually, where it gapped up. So it had ramped up and faded off, which is a sign of sort of like a, maybe they're a transitional day where they're coming in and then they're not in a rush. They want everybody to sell it off. Next day it gaps up, sold off, and it looked pretty heavy, and then all of a sudden they reclaimed that 105. So this particular day on the 24th, that was the day I was like, well, this thing should have died, and I started to accumulate it in the 110, 115 range. And it shot all the way up, and as always, you've got 165 top this day, 165 again. So you know that you should be locking in, and I reminded at the 160s in the room, make sure you're locking in around the core. But oh man, it pulled back. Is it over? Who knows? We'll find out. But you should have locked in, and it's also normal for things to pull back along the way. So we'll see. And I'm letting it work on some. I have about 2/3 left. Sold about a third into the ramp, but pretty nice move so far. It was about 50%. And STBX I had on here on the continuation side, because I am hopeful that we have a bounce and what I was talking about, where it kind of ramps, traps, squeezes out, and then gives that nice full day fade. So that's about it. I'm not overdoing it. As I said, it's most important for me to stay in the zone right now, stay firing on all cylinders, wait for trades to come to me. Everybody gets excited on Monday, and you trade pre-market, you get super aggressive off the open. And the problem with trading off the open is your blinders go on immediately. So you miss all these other layup type trades. And I just want to remind you that, when I'm trading my best, I'm trading less, thinking more, waiting more. And, when I'm not trading my best, I'm trying to find the trade. I'm involved at 5 a.m. sometimes, 7 a.m., whatever. And for no real reason. Just remember, as soon as you place that first trade, you're kind of, strapped to the desk. So for me, I'd rather push that off as long as I can until, something sets up. And there's been a couple days where there's been nothing pre-market that is a plus. And I've said it, and I've waited and waited and waited until 9:45, 10 a.m., 11 a.m., whatever. But the key is, don't force it out of the gate, because your blinders will go on right away. Last but not least, don't forget your maxed up. I saw somebody say it was like a excuse for bad management or something like that. And Lance, who a lot of people respect in the community, said we're all human, right? So you're gonna make a mistake. You could have perfect risk management, but when you make that mistake, you're gonna be glad you had that backstop. And so consider it. Talk to your broker. But that's about it. I'll see you guys in the room tomorrow.